Okay, recording in progress. Yeah, I miss a lot of you guys who aren't here every day. And, just real briefly here, and I'll just kind of open things up here. And first of all, let me just say I'm really hoping to have a healthy exchange, a conversation today. Today is a conversation. You call it whatever you want, conversation with Gil. I really do want it to be a dialogue. And to that point, if someone really wants to open up their mic and verbally make some comments or ask a question, you're more than welcome to do so. Just keep the background noise out of the equation if you can. If you're in a noisy environment or situation, then by all means, just keep the mics closed and muted until you want to chime in. If you feel more comfortable chiming in with comments or question in written form, you're all welcome, certainly, to do that. I do really want to have a healthy exchange. This is not so much, I will certainly touch on trading, and I'm open to anything you want to ask me about. I'm going to be an open book here today. Really, the conversation that I want to have is really about just the proper path to take for a trading career. That's really the subject matter. There's been a lot of talk, and there's always been a lot of talk about about how to trade, and of course, a significant number of traders today are utilizing prop firms. Perhaps, and I've spoken to a number here recently. Um, uh, some using prop firms exclusively, some traders, of course, using their own cash accounts exclusively, some using a combination, which I think is a great idea. I am now myself using, as you can see, a combination. But for those of you who may not know, 64 years old, 38 years in the stock market business, and a good chunk of that time as a trader. This type of prop firm environment just didn't exist back when I was cutting my teeth. You had a cash account, and that was it. There were certainly prop firms, but prop firms back then literally gave you cash. They fronted the money. They took the split, but they were funded accounts. This whole idea of SIM and subscriptions and fake accounts and all this is still, I mean, for me, it's still very relatively new. I mean, I know they've been around for years now, but this whole concept is not what long-term professional traders used to get to where we are. Okay, that's correct. Real prop firms, Joe, make you put up cash. So way back in the day, um, they gave me, for example, way back when, a $25,000 cash account, and I would put up a certain amount, and they would put up the majority. But you had in the 90s, that's correct. You've been around a while, Joe. I won't ask you to tell me your age, but you've been around. So, that's the way it's done. And there was a split. It was an 80-20 split, in our favor. We'd get 80%, they'd get 20%, but they'd put up 80% of the money, you'd put up 20% of the money. They'd take 80% of the risk, but get 20% of the payout. We'd take 20% of the risk and get 80% of the payout. Okay. And that's the way it was done. All these older, that's great, and yet you're still, I love this business. It disturbs me where it has gone. It really does disturb me to where it has gone into this, the depths of of the prop firm business, but and many are using the prop firms obviously as a means to learn. I think it's a great environment to learn discipline, to learn patience, to learn trading without risking your own capital. But the idea of staying attached to these guys for life, to me, is ludicrous. Uh, my endeavor, my goals, if I were a young trader today starting or relatively new or trying to really move along this career path, would be to use the prop firms. They're using you. Trust me. We all know it. They are using you. Let's turn the tables and use them. Now, I'm not looking to scam them. I'm just looking to say, listen, I'm paying them for a subscription. I'm using them for their eval accounts. I'm going to pass their evals. I'm going to get their funded accounts. I'm going to get payouts. And I'm going to use those payouts to fund my own cash account. That's how I think a trader should go about the path. You know, my son is 31 years old, raising a young family. Certainly raised in a household of a trader. He knows trading, and he knows when he wants to really set aside the time to do some trading, that this is the path I would want for him. I don't want to stick cash in an account for him. I don't want him to stick his own cash in an account. I want him to use a prop firm to trade, pass an eval or two, trade a funded account, learn the proper tools, learn the technical knowledge, which he knows, prove patience, prove discipline, take the funds, take the payouts, build a cash account. You might want to call it use the house money. Now, I always hated that term when trading because it's a wagering analogy, and I don't think that trading and gambling is a good analogy. If you're becoming a gambler in your trading, that's bad. Trading is not gambling. It is very calculated. It is very disciplined. But I want to use the house's money. I want to take their payouts while I get them and build a cash account and do that from firm to firm. If it's take profit, it's take profit. If it's Bullinox, it's Bullinox. If it's Apex, it's Apex. If it's stop, it's Top Step. Use them all. And again, I think many of you have that as a plan. Get their payouts, fund your cash account, and then end the insanity, if you will, get off of them. Because trust me, let me tell you the dirty little secret that some have learned, some have not, some have yet to learn it. If you are successful and consistently successful with these prop firms, they will shut you off. They will close your accounts. Take example, take profit. If you have multiple pro accounts with take profit, and you're getting payouts and you're getting payouts and you're getting payouts, they're going to force you, if you will, into Pro Plus. Everybody's heard of Pro Plus? So if you're successful, they're going to move you to Pro Plus. Hey, congratulations, we're moving you to Pro Plus. That's like an invitation from the mafia. You can't say no. And they're going to take away 5 Pro accounts and give you a Pro Plus account. They're going to give you one truly funded account, and and then they're going to limit you to 5 micros in that account so that you can't put on 10, 15, or 20. You can't over leverage. Because again, I think as we all understand, the business is built for us to lose with them. Their business fails the more people succeed. And so that is a fact. We've had a number of our subscribers here do very well with Take Profit. And in the end, they get those accounts taken away and they go to true live accounts. And it's hard to say, all right, well, my game plan was to have 5 funded accounts, 10 funded accounts, and I'm just going to make $100 a day, $200 a day across 5 or 10 accounts. And I'm going to make a boatload of money consistently with small gains and just let them add up, let them add up, let them add up. Well, eventually they turn around and say, okay, this guy's just too consistent and taking too much of our money, so we have to send him to True Live. Now, the other firms, of course, make you jump through so many hoops, all right, that it's maybe very difficult to stay consistent on the payout scale with these guys, all right? Point being this, the idea or the concept or the business practice that I should just shoot for the moon. Let's take the eval process. I mean, how many of you, I'm sure, and again, there's no sin in it, but you take out two evals, put opposing trades on, right? One big bet on the long side, one big bet on the losing side, on the short side, and one of them's going to hit and you're going to pass your eval, right? That's the way that we game the system. And they're onto that. They don't care because they know that once you get to funded status or a PA practice account status, you can't do that. Now you have to trade for real, right? Now you have to trade for real. And so the behavior that you utilize to pass evals the quick way, I hate to say it, cheating the system, in the end, now you have to shift gears and become the slow, methodical, patient trader and trade with prudent leverage. A $50,000 account, you have to trade with a small number of micros. You're not going to trade with a $50,000 PA account and put on 2, 3 minis. Let's face it, we all know that that's a little bit crazy. That's not sustainable. That's going to burn you in the end. But the idea that you should now take multiple evals, pass them, get multiple PA accounts, and then still be willing to sacrifice one just to get a payout on another, all you're doing is taking the eval game and bringing it on to the PA practice account side of things. And in the end, you're going to have to start all over again. And all I'm trying to say is if that's the career path that you want, do you want to have to start all over, pass, get one payout, and then have to take a break and start all over again and get it back up into drawdown status so you can take another payout? And if you want to keep doing that, great. That's my own personal feeling is that is not the way that any of us who have been doing this for 30 plus years uh, have sustained doing this for 38 years. The only way that you can look down the road and say, hey, I'm still going to be doing this in 10 years or 15 years or 20 years, or better yet, I want to pass this skill set on to my kids. The only way you're ever going to do that is to do it right in the first place. Wouldn't you agree? The only way to do it with longevity is to do it right in the first place and build slowly and build slowly and build slowly. And what matters is not the size of the win. It does not matter. And I've seen this all over the industry. And I saw an ad on, I think it was Facebook, popped up on my Facebook feed, right? And the ad was talking about, hey, you can be very successful with a 45% win ratio. When you get these big wins, and you get these great big wins and you manage your risk, you can be very successful with a 40%, 35%, 45% win ratio. Uh, I'm sorry. I don't, maybe it's me. Maybe I was brought up differently in the business, but that seems ludicrous to me to think that I can have long-term success with a 40%, 60% loss ratio, 40% win ratio. You won't be around for very long. Think about this. If this is your own cash, let's put it to you this way. Let me ask you a question, everybody. You give me your money to trade, right? Or better yet, I'm going to ask you, hey, you want me to trade your account, Kevin? Want me to trade your account, Kevin? I have a 40% win ratio. I win 40% of the time. You want to give me your money to trade? Now, if you're a baseball player in the major leagues and you're right 40% of the time, you're God, right? You have a 400 batting average. There's been very few who have ever had a 400 batting average. let alone for very long. But 400 batting average might be great in baseball, but it sucks in trading, right? It absolutely sucks in trading. That's not the way to be consistent and have long-term success. Long-term success is, to me, is built on the foundation of consistency. All right. And not consistency. Here's, with the prop firms and consistency rules, I don't mean that type of consistency. I mean consistency with I have a trade setup. I have a trade. My trade is 80 to 85% of my trades are winning trades. 85% of my days are winning days. 85% of my weeks are winning weeks. So if you think about from a business plan perspective, and you can be right 80 to 85% of the time. Nobody is ever going to be right prolonged for 100%. Nobody. But you can have a long-term track record of being right 80% of the time. So think about it. If 80% of your trades are winning trades, then by default, let's just take a week and say 80% of my trades are winners. I'm going to have winning days. Worst case scenario, if 80% of my days are winners and I have one loss, and I manage that loss and keep it reasonable, then 4 out of 5 days win, I'm going to have a winning week, right? And therefore, if I have a winning week built on an 80-20 winning day ratio and a winning trade ratio, then how can I have a bad month? How can I have a negative month? I should never have a negative month, right? So I think, again, part of the path to trading, long-term trading success is, again, utilizing the prop firms to get you there, getting your account funded, getting your funds built on the back of them while you're being successful. Yes, indeed, get your payouts. And if you want to pay yourself a reward, I think that's very important to enjoy some of the fruits of the labor. But to then take the lion's share of those profits and fatten up your own cash account, right? Because if you can consistently get payouts off of a $50,000 PA account, or God forbid, a $100,000 PA account, I mean, let's face it, you're really talking about a $2,500 or a $3,000 cash account. We all know that. So if you can consistently get a winning ratio and a successful day, successful week, successful month, and you can take those payouts. I don't care if it's $1,000 for the month or $1,500 for the month. And if you can short term do that across multiple accounts, then if you're willing to give it time, 6 months, then in the end, you will have a cash account that will exceed what you're doing with these prop firms. And you will have arrived and you'll have a cash account, and then you can continue the same path. So when I started trading and started being consistently successful, I would say take half of that profit for the week. And I would not wait for the month, by the way. We are all different individuals. I am a guy, and again, it's important for everybody to know who you are and identify. All right. I am a guy who needs short-term results. That's how I'm built. I'm impatient by nature. It's took me years to grow patience in trading. I'm impulsive. I'm, in certain ways, I lack discipline. Uh, I like immediate gratification. Okay. I'm just telling you, I'm keeping it real. I told you today I was going to keep it real. And in trading, those are detriments. So I found my path, I developed my business plan, and I said, I'm not going to wait till the end of the month to take my profits. I'm going to take my profits weekly. I found myself, if I waited till the end of the month to take money out of my cash account, let's just say I had a $50,000 cash account and I'm up 2 weeks into the month and I'm up five, six, seven, 8 grand, whatever. I think I've got all kinds of, oh, great, this is going to be a great month. This is going to be a great month, right? I'm going to take this killer withdrawal at the end of the month. Or God forbid, I was down in the first week or two and I did some stupid things and I was in a drawdown in that. And I would say, well, that's okay. I still got 2 weeks. I still got 3 weeks to make it back up. Bad, bad mentality for me. So I found personally that whatever the positive week was, no matter how small, no matter how big, I take it out. All right. In the early stages, I would say I'm going to take out 50, 60, 70% of it, and I'm going to leave 30, 40% of it in to fatten the account. So if I made $1,000 for the week, I'd leave 400 in. I consider my payout to be 600, and I would grow the account by leaving some of the profits in. Don't do that with a prop firm. Take your payout. Enjoy some of that money that you worked hard for, whether it's going to dinner, taking a weekend away, doing something nice for yourself or your family, and leave the majority of that, half of it or so or more, and use it to build that cash account. And over a period of several months, you will find yourself making incredible progress and in a very short period of time, and relative to a career, what is 6 months to a year? If you were establishing any other business, right? Online presence, restaurant, you name it, any type of business, and you were coming up with a business plan, let me ask you a question. Everybody chime in. Think of a business, you've could be anything, any type of business. And you said, I'm going to start this business and but I need to be successful. I need to make a living right out of the gate the very first week, the very first month. I need to be successful. No, you don't need to be cash flow positive. Now, in the trading business, you don't want to be too cash flow negative. You don't want to be taking losses. Otherwise, you're going to be out of business pretty quick and you're going to have to refund your account. All right. So this is different. This is a different mentality. This is a different form of business. But if I am willing to take the prop firm approach and say, I am willing to be patient over the next 6 to 12 months and learn, take some of those profits, build your cash account, take some of those profits and pay for additional real education. If you need education, buy yourself some more education. Take some training, right? Parlay that money into a deeper understanding of the market. But if you're willing to be patient, you will get there if you take the proper path. But who isn't sick of, you've been at this for a year and you're still passing evals? Anybody still sick of that? Here you're at it a year or more and you're still trying to pass evals or get to that first magical payout. Ask yourself why it's taken so long. There's no shame in it, Sam. I appreciate your honesty. There's no shame in it. But we need to get to the heart of why. Is it because I had the patience? Have I truly taken the proper slow approach path? Right? The charts that are up are Bullinux 50K accounts. They're eval accounts. They're very close to finishing up. And those are the gains in the accounts for today. Those are typical. Those I would consider to be excellent days on a 50K PA account. You have to pass these evals like they're funded accounts. You have to manage the risk and take the reward as though they are real money accounts. That way there, it will translate. That behavior will translate into the same behavior in a funded account. But, if it if something's going against me, we can't shoot ourselves in the foot by just blowing up and say, well, I'll start all over again. I promise I'll do it better on the next account, right? It's too easy to pay Bullinox 23 bucks or 15 bucks when they have a discount code and start all over again. It's too damn easy. And they know it. That's why they do it. If in order for you to reset your account, you had to come up with 2,500 bucks, let's face it, who would still be here? Right? If every time you blew an account, you had to come up with $2,500, like we had to in the good old days, like Joe, okay, where if I blew the account with the prop firm back then and I wanted to keep doing business with them, I had to come up with another 5 grand, right? I had to come up with another 5 grand. And if I did it more than once or twice, they would say, sorry, dude, you're not good at this. Right? There's not many second and third chances with the traditional good old prop firms where it was a blend of real money, mine and theirs. No way. No way would they let you keep coming back. You had to prove yourself. Okay. And there was risk managers. Okay. And so again, if you find yourself tilting, uh, again, there should, I think we panic in some ways when we've gained some ground, we begin to lose that ground, and we just put on more size. And we're going to talk about that in more detail in just a minute. But the behavior, we have to establish good behavior, discipline, and patience. As I told you, I am one of the most impatient people I've ever met. I don't have great patience for certain things. All right. I like instant gratification. I like immediate results. I have a hard time waiting. And that's why I shifted my mindset from one of, hey, I want to have a good month so I can pull some money out to, hell no, I'm going to take it out at the end of the week. Okay. Because I found myself saying, listen, it's been a great week. Monday profitable, Tuesday profitable, Wednesday profitable, Thursday profitable. How many people have blown it on Friday and just gone into that weekend dejected and demoralized? They haven't met me yet. Joe, listen, again, I am not the pot calling the kettle black. There are very few retail traders, plenty of professional traders. There are very few small retail traders that have lost the way that I've lost. So I am not here preaching that I have not lost buckets, buckets of money trading, magnitudes of six figures. Okay. I'm not shy about it. It's part of who I am. It's part of my history. I've lost a substantial amount of money during my lifetime, which is what forced me to learn and understand how to do it right and seek out the knowledge of how to do it right. You know, I've told many of you, for example, years and years ago, more than 10 years ago, I had a crude oil trade position on. I was long in crude oil. And I had 40 futures contracts, full futures contracts, and 60 option contracts. And I was so adamant and so stubborn that I didn't have stops on any of it. That's a true story. And I went to bed at night with those positions on with no stops. And dare I tell you, I was long crude oil at $89 a barrel. Crude oil went up to $103, and I had that position on, and I didn't take any profits. I was cocky. I was confident. I was absolutely sure I knew where crude was going, and I was determined to get everything I could get out of it. And suffice it to say, it was a life-changing trade because crude oil crashed and I didn't get out. And that's true. And that was my defining moment. That's when I said, multiple things. But first and foremost, I said, there's more I need to know. There's more I need to know. I don't know what I don't know. And secondarily, I said, you really better establish accountability, discipline, and patience. And at that stage of my life, I had nothing, I had nobody holding me accountable in my trading. I didn't hold myself accountable. I didn't have a mentor to hold me accountable. And that allowed that whole situation to occur. And it was a great investment. I learned a lot. And from that moment on, I was absolutely determined to say, there's something I don't know, and I'm going to know it. I'm going to go seek it out. And I became an explorer at that point in time and said, I need to know why the market did that. And I've learned, so I know something that I didn't know then. And more importantly, uh, I went on a journey of self-discipline and patience. I said, if you're ever going to do this the right way, you can't fly by the seat of your pants, right? You have to develop patience and discipline if you're still going to be here. And I am still standing here many, many, many years after that event. Here I am, uh, able to trade better than I've ever traded before. Had I not gone through that experience, I don't think I would have learned what I know. I wouldn't have sought the knowledge, and I wouldn't have looked hard at myself um, and tried to figure out how I'm going to change myself from the inside out and become patient and disciplined. It's funny. Um, Mike, quick comment. I trade both the cheap and the not so cheap vals, and I suck at both of them. Now going to just use a sim account ninja, no anxiety over rules, fees, and when get consistent, just put more money in a real account at a broker. That's a good plan, Mike. I'm telling you, it's a good plan. All right. Because listen, I don't care if you're spending cheap money or you're spending $100 at Take Profit or some of these other, go straight to funded. My personal opinion of straight to funded, unless you're a proven trader, straight to funded is a disaster. It's going to cost you an arm and a leg. Okay. Now, let me finish my thought and then I want to come back to Mike's comment because he's brought up a very important point that I want to make. But let me just talk a little bit about myself more. Um, I've always been an athlete, and many of you who know me know that I am a competitive power lifter. Very competitive, I might add. Um, and when it comes to athletics, like lifting, okay, and it really is applied to many things, you'd better be disciplined. And it's funny, I've always been disciplined. I've been a weightlifter almost my entire life. And whatever the lift happens to be, I learned a long, long time ago at my infancy that you treat every weight as though it is your maximum. You've all heard practice the way you play, right? Well, if I'm going to, say, attempt a deadlift of 500 pounds, if I've trained poorly at 135 pounds, and if I've trained with poor technique at 250 pounds, and I've trained poorly with technique at 300 pounds, I'm going to wreck myself when I go and attempt 500 or 600 pounds, right? So every time I get under a bar, I treat it as though it is a maximum effort. Even though it might be light as a feather, I treat it the same way I treat my maximum effort. And when I learned to apply that in trading, I had an aha moment. It's like, hey, I mean, I used to trade 150 mini contracts at a time, hundreds, 50s, 150s, 200s. That's maximum lifting. And if you don't have the proper form and technique, you're going to destroy yourself. So I say today, you can't trade a mini contract or two mini contracts or three mini contracts, if you can't consistently trade with three micros, let's face it, what's the difference between trading three micros and three minis? What's the difference? Just numbers, right? They're just numbers. Three micros, three minis. The trade didn't change. Does the trade change? Let's go to the chart here for just a minute, and then I'm going to come back to Mike's point. If the trade is to short, here we are coming up to ultra levels, right? Here we are coming up to our indicator, 65.98, 6,600. If the premise is, hey, we want to short this level, then we should, and I want to have a stop. What should not happen in my world? Okay. I don't want to see a 5-minute close above 6,500, 6,600. So I'm going to short. I'm going to put a stop, and I'm going to honor that stop. And it doesn't matter if it's three minis or three micros or 30 micros, 30 minis or 300 minis. The trade is the trade. Just because it's three micros and it doesn't seem to be that significant doesn't mean I can't honor the stop. So when you're in sim, Mike, okay, trade it as though it's real. Just like a guy, who wants to get his pilot's license and they put him in a simulator. If you crash that simulator time and time and time and time again, you're not going to be a pilot. So if you're in sim or eval or PA accounts and you're trading 3-4 micros and you're going to short the market at 6,600 and I'm going to put a stop above 6,605, I'm going to give it 5-6 points of risk. Honor the stop. Don't just keep adding to the position because, well, it's only 3 micros. It doesn't matter. It's no big deal. It's only sim. No, you're practicing not the way you need to be playing. Okay? You have to practice the way you want to play. Treat 3 micros like it's 30 mini contracts, like it's significant money. That's the only way you're going to, and I'm not going to use the word trick yourself. It's the way you're going to train yourself to do the right thing time and time again. Because in the end, when you graduate to go from 3 micros to 3 minis, you have to have trained. Just because you have an account, just because I can drop 50 grand into an account, I have not earned the right to trade in size. Just because I have the physical means, the financial means to do it, I have not earned the privilege of trading in size. Any fool can drop 100 grand who has it into a futures account and start trading 25, 30, 40, 50 contracts. It does not mean they should be doing it. It's like running a marathon. You don't walk out the door one day and say, hey, I jog 2 miles every day. I'm ready to do a marathon. No, you're not. Perhaps physically you might be, but you're not mentally prepared for that challenge. And this is all part of conditioning and trading, in trading, conditioning and training to be a professional long-term trader. There is a path that must be taken. There are no shortcuts. There are no shortcuts to being a long-term trader in this game and still be at it in 10 to 15 years and be successful. You can't shortcut it by saying, hey, just blow up an account, get a payout, and if that doesn't work, start all over again and do it again. That's not how it's done. It's done through conditioning and building. And once you can consistently, if you can look back over 3 months, 2 months, any period of duration and say, I have an 85% consistency. I have an 80% consistency ratio. All right. My worst trading day is no more than 2 times my best trading day. So you should keep track of your average wins. If my average winning day is $278 and 50. Let's just say that's my average. I average 300 bucks a day. Then you cannot have a losing day that is more than 600 bucks. You should not have a losing day that is more than two times that because mathematically, if you keep doing that, you can't win. They will beat you every time. And if you let that turn into three times your winning average, then you're going to dig a hole that you can't get out of. And if that's a real cash account, then it's game over. So these are just some of what I talk about to those who are interested in understanding how do we do this. This is not an overnight success story. This is a labor of love, and you've got to find the way to do it and do it right. Okay? Must do it the same way, Mike, in training as you would do it in a real account. And so I applaud you. Learn in sim. It's no different than passing an eval because if you can do it right and you can be honest with yourself and say, I'm treating that sim like I get just as upset if I lose money in that sim account, okay, than I do if it's real. You've got to keep it real. Otherwise, it's just a farce. All right. So sim can be very, very helpful. If you find yourself, hey, I've got a $50,000 sim account, would you really have a $50,000 live account? Or is your live account going to be 5 grand or 10 grand? What is my live account going to be? That's how you have to trade your sim account, right? Keep it real. And because again, if you want the long-term success, it's the only way to get there. It doesn't happen overnight. And for some of you who have been at this for a long time, perhaps, I simply would say this. But you might have been at it. You may be struggling for the last year or so, but can you honestly say that you've taken that approach? Now, there are some people who are just not cut out for trading, period. And there's no shame in saying, it's not my thing. I can't master my demons of patience and discipline. Have you done the right things? Have you gotten a mentor? Have you gotten someone to listen to you and talk to you and keep you accountable? That for me was a key. All right. Now look at Ultra here, by the way. Look how nice this was. All right. We came right up. Now again, I know that these are round numbers. There's a centennial number there always, every handle, 65.97, 65.98. That's just an obvious nice little sell level. But look how beautiful this worked here this morning. I mean, we just had some really nice trading today in the room in the ES. And again, it comes down to knowing something about the market. This morning, first thing, just want to touch on trading a little bit, and then any questions we want to address them. We knew coming into this morning session in the S&P that 53.52 was the linchpin. This was the linchpin price. That any rally in the S&P today was going to be done off the back of 65.52. And there's your pre-market CPI report. Market runs up, obviously, after the open. Tests, and we went long right here. We bought it. Anybody in the live room saw us do it. We bought it here, okay? And we certainly managed the trade nicely, all right? And we took it on up. And we said, listen, they're going to go to 75. Now, here's what's interesting, guys. As confident as I was in this trade, and I know a lot about the market. I know things that you don't know. And that's how I knew that 52.53 was the key to this whole rally. And as confident as I was in that, I didn't back the truck up and put on the mother load of positions and max out. No, because I could have been wrong. I was super confident and I knew the right price and I had the stop, but I still put on a reasonable size trade for what I was trying to achieve. And we scaled out of it up to 72, 73. Traders here who are in the room who know it, they can attest to it. Our last contract was taken off up here. And I said, they're going to go higher. They're going to go to 85. They're likely to go to 95. And they did. But all I needed to do was be on the winning side, take my chips. There they are. That's a 50, again, small. I think we did a total of, I bought three contracts higher than I should have. I added to the position on the dip, and then we held on. And I didn't get stupid with it. I didn't get crazy aggressive with it. I didn't keep scaling in and back the truck up, so to speak, and get loaded up and try to hit the grand slam. Good old me would have done that. This is just prudent, thoughtful trading, because if you can put these numbers up day in and day out and look back and say, yeah, if you look at the calendar on the Discord website, you'll see it. If you can have 3 losing days, 4 losing days in 2 months, then yeah, you're going to build long-term success. That's the key. Okay. We did the NASDAQ, Cal. And this is where I had a little bit of impatience on the NASDAQ. Here I had confidence, all the confidence in the world, that the NASDAQ was going to do this today. All right. And I gave you one of the exact prices was 20,000, 24,044. Now we still haven't seen the all-time high yet. Interesting, Cal. We still haven't hit it. As I said, before they get to the all-time high, 24,044 is a price that stops the market. And there it is, right? They hit it here. This is where I took my last position off. And we bought it, and I bought it prematurely. I bought a fake out breakout. I got long on this advance, and I added on the pullback. And I lived with a drawdown. But all the time I said, none of this drawdown, here's talk about trading. None of this price action made my trade incorrect. The premise, the backbone of the trade was still validated that this rally was going to happen. None of this price action negated the fact that the market was going to do this, and I could predict that. Therefore, I could not get out of the trade even though I was in drawdown. I was in drawdown, and I didn't get out of the trade. Why? Because technically the trade was not wrong. My entry was premature. It was aggressive. But the premise and the backbone that supported the notion of the long trade was still correct. Therefore, the trade was right. I had some human error this morning, some impatience on the NASDAQ. I wanted to be in. I knew the rally was going to happen. I didn't hope it was going to happen. I had good information that said technically today's the day. And I put that into the morning brief 2 hours before the market opened. So the proof is there. But I still had impatience. I wanted to be in that NASDAQ for that run. And I had to live with a drawdown because the trade was not wrong. I would have been a huge mistake to stop myself out of that trade. My execution was much better on the S&P. It was nice, crisp, and clean. We did exactly the proper timing on the S&P, and it worked out beautifully in both markets. All right. I was confident with it. Now, talk about accountability. And I said specifically, listen, if the parameters of the trade change and I'm wrong, I have to get out. Right? Golden goose on ES. That's correct. The golden goose. Right? It was beautiful. It really was. So it's, again, as we begin to wrap up, and again, I love the markets, and I think Joe, and Joe and perhaps many of you were cut from the same cloth. Okay, I'm passionate about markets. I love it, and many of you here know that. I could talk about them all night long. I really could. But listen, in closing, you could know everything there is to know technically about the market. You could know all you need. I know technically all I need to know. I don't need to learn anything else. I know everything I need to know to be successful. And I can still lose and still fail miserably if I lack patience and discipline. You need patience and discipline along with knowledge. Give me someone with no knowledge about the markets, but give me somebody with absolute patience and discipline, and I can make them into a hell of a trader. Because those are the keys. And If you're not exhibiting those because you're taking the wrong career path, because you're willing to blow an account to get a quick payout, and well, we'll just do it again. That's not the way to develop the proper skills. You're not practicing the way you need to play, right? We're not practicing the way we need to play. That is, thank you, Sam. That's the message I want to preach. You can have all the technical knowledge that money can buy. You need to develop patience and discipline. And when you're taking the high fly approach of busting accounts, get the payout, get another one, you're not learning those skills. You're just not ever going to develop those skills taking that approach. And therefore, you're going to be stuck with those guys and that approach forever. And so, all I ask any of you is ask yourself what you want to be. How do you want to do it? You have access to good knowledge, and again, I don't mean that self-indulgent. I have good knowledge. I can train you on, I can give you the indicator. I can teach you the G level technique. What's the secret behind these price levels? How to locate tops and bottoms, how to time the market. It can be done. You can know all of that if you want to know all of that. I can teach it, and I can teach it well. But you have to have the discipline and the patience, and you have to go on that journey yourself with a mentor. You have to go on that journey to say, I need to develop those things. And all I'm saying is take the proper career path to do that. And don't shoot yourself in the foot by taking the quick, easy route, because that won't end well. It'll never end. You'll be stuck in that matrix forever. Okay. I go by both, Joe. I go by both Gil and Jerry. Gil is a nickname. There's a long story behind it. I won't get into it. Most good friends call me G. So everybody can call me G. Uh, but there you have it. Did I answer everybody's question? I think I'm good with patience and discipline. Just ask my wife. That's great, Mike. Listen, women make great traders. Some women make great traders. Women tend to be more patient and disciplined than us men. It's just how we're built. I don't think I'm unique in that regard. Um, but I think women can, and I've seen some amazingly successful women traders because of patience and discipline. It's very true. Uh, and that's it. It's the skill. The skill set really comes down to patience and discipline. Give me a setup, teach me what I'm supposed to do here and why I'm supposed to do it, and that's it. Where am I right? Where am I wrong? Okay. If I'm right about the market down here, what should happen in the moment? In the moment when the market is coming down here after what they did in the morning, what should happen here? Then if as long as it happens, I'm long. If it fails and it does something it shouldn't do, then I get flat until it resets and I get my golden goose, right? And here it is in the pre-market. They broke it, got back above it, and look at it. What is so magical that as we approach the pit session, that pit session is all that matters in the end. Notice how they sit on my 65.52 level. Why is that number so damn important? And once you understand why that's so important, then I can have the rules and I can have the discipline to say if they stay above it, I can buy anywhere I want. I could buy here, I could buy here, I could buy here, I could buy anywhere I want. or that where I'm willing to. The best place to buy is right here. But as long as they're closing above this price level, then I stay long. The discipline is if they close below it, I get out of the trade and I wait for them to get back above it or go back and test another level. That's the the accountability, the discipline, and that's what a the proper knowledge should be able to give you. If there is something about this price that says we're bullish as long as we're above it, then stay long. If we're bearish below it, and you need to understand why we're bearish below it, then don't be long if we get below it. So adding and adding and adding to a position, if that is the make or break price, is a fool's game. Now, I did that with the NASDAQ today, but they didn't break the make or break price. I just bought it early and I had to buy it on the way down. Just I bought a little bit here in the S&P. You saw me do it. I bought some 61s. And I said if they come down to 52 and 53, I'll buy more. It's not adding to a losing position. It was done with forethought. I planned it ahead of time. And that's not adding to a losing trade. That was my game plan all along. Right? Let the knowledge be your discipline. Right? How about copying across multiple cash accounts? Is that realistic? It is realistic. And Jennifer adds, we can generally tolerate pain. You can, most women have a higher tolerance for pain than men do. It's obviously nature, right? That's nature. And speaking of nature, we all have our own nature, and the markets have their own personality and nature, and we need to get in tune with what fits us. There are certain markets that fit me and others do not. Like crude fits my personality and my nature like a glove. Right. Now, Scott is asking a question. Can we trade, or what do you think about trading, copying multiple cash accounts? Is it realistic? Yes, it's not unrealistic. But if you have multiple cash accounts, I would always leave something to hedge. All right. Because if you're wrong in one, you don't want to be wrong in all. Now, once you've shown me, Scott, that you've got the discipline and the consistency that we need, 80-85% consistency. And when we're wrong, we can manage that losing trade, walk away from a $300 loser, be willing to. It's a great skill. I'll tell you right now, it feels good to walk away with a modest loss and not dig yourself a hole that you can't fill in quickly. It feels good to walk away. It's a good skill to learn. Walk away with a loss, a manageable loss. Walk away with a manageable loss. Learn how to do that. It's going to teach you how to walk away with a win and not keep trading and trading and trading and trading. It's also going to teach you, obviously, the important skill of accept loss. It's going to happen. I am going to fail. Okay? I am going to have trades that fail. It doesn't make me a loser. It doesn't make me a failure. I become a loser and a failure if I let it define me and I let it get out of control consistently, out of control, out of control, out of control. But accepting a loss is a natural part of trading. Accepting a hole, you can't just letting it run till you can't get out of it. You just blow the account up and you go, okay, well, for 15 bucks, I'm just going to start over again. It's too damn easy to do that. If that's a $5,000 cash account, you're not going to let it blow up because you don't have the means to start all over again and throw another 5 grand in there. Do that a bunch of times and see if your spouse is willing to let you do it. Cal, it is a great self-accomplishment to be able to walk away with a small loss and say, hey, I could have stayed there and really potentially dug myself a hole. It's a great accomplishment to turn a loss into a win, but did I do it for the wrong reason? I can have winning trades that I feel ashamed about. That was a win and I am not proud of it because I won for the wrong reasons. I would rather lose for the right reason and walk away with a loss than have a great win that I got lucky on, that I had no right to. In the end, the win is more detrimental than the loss. That's all the psychology of trading, right? So please, I hope you enjoyed some of the conversation. I really want to keep doing this on a bi-weekly basis and furthering the conversation. Again, I have, as I've said in the live trading rooms, it's almost to me, people ask me, why do you do this? Uh, I don't need to. I enjoy it. I have a personal mission, if you will. This business can be dirty, scammy, and I don't like it. It doesn't have to be. Can be a very legitimate business of helping people learn to be traders, and I just want to be one of the good guys. I really do. Um, I know something about markets. It's real. If you want to know more about it, send me a DM. We can talk about training. I'm not here to promote training courses and the live trade room and push all of that. I'm not here to do that. I was here to just talk honestly and openly about trading and the proper career path to trading. If you want to know more about what I can offer, you're certainly happy to DM me, ask about pricing or packaging or whatever. That's fine. I don't want to get into that here today. That was not the purpose. The purpose is there is a proper career path. There is a way you can be successful. We know what the monkeys on our back are that have to be managed. And a big part of managing those demons is taking the proper trading approach in the first place. Don't try to game the system and take the short path, get an account, blow it up so you can get a payout on something else. It doesn't help you in the long run. It's short-term gratification, and God knows I love short-term gratification, but in the end, that's not the way to do it. Okay. If you don't want scams, stay away from prop firms. Absolutely. They're there to help you lose. They're there to give you the rope to hang yourself with. But there is a way to use them in the short term, Joe. There is a way to use them to succeed, to learn, get some money, get some payouts. I'm telling you right now, if you're too successful, they are going to shut you off. So be ready for that. If I get you successful with any of these firms, you're going to get some payouts. But if you get too many and they're too big, they're going to say, thank you very much for playing. We don't want you. Okay. And then don't feel isolated and alone. Join a community, be part of the Discord community. If you want to be a member in the live trade room, terrific. I welcome everybody who wants to learn, who wants to be on the proper career path. I'd love to have as many of you as possible. I would. So you can reach me on Discord, send me a direct message. I'm happy to chat anytime. And we'll call it a day. Okay. Use them, Kevin, correct, to build your own cash account. Build your cash account over a series of months and then be done with them once and for all. And you've created the discipline and the patience along the way. And again, take payout, leave some in the account. Take payout, leave some in the account, and slowly build that up over time. You can change things dramatically in 6 to 12 months if you're willing to take the right path. Okay. Can I talk about crude today? What would you like to talk about, Mark? Here's Ultra on crude.
Can you hear me?
Yeah, I can hear you. Go ahead.
Just the levels that you gave at 62.70 and 62.24 and what
Yep.
happened today
Yeah,
on
sure.
the other chart. Just what happened.
Well, I'm going to use this chart because I don't want to give away my secrets.
Oh, okay. I'm
Okay.
gonna mute.
Go right ahead. So, yeah, so this morning I talked about uh, two key levels to our traders in crude oil. Now, there's something very special about crude oil that we know and that we utilize. One of them was 62.70, which happens to be, and I can't move that line, so let's put 62.70 on the chart. And those who know the secret of the crude trade we know that 62.70 is an important level. And see how first thing this morning, they came down to 62.70 just before crude opens, the pit opens, and they test 62.70. Now we know that where the market, where any market opens is critical. And so they opened just above 62.70. That's a little bit of a hint of weakness. So it doesn't matter what they've done. Now, look how beautiful the short trade was. We talked about shorting $64 yesterday. We did short $64. That's way up here. We shorted $64 with the mindset that $64 would fail and it would lead to 62.70. And here they are coming right into the pit open at 62.70. Something about crude that most traders don't, maybe most traders don't know. So this open right here was so damn close to 62.70. That's a sign of weakness right there. So ordinarily, if crude, when they open, if crude opens here at 63.20, let's say the pit session opens and comes down to 62.70, I would have bought 62.70. I didn't buy 62.70 because they were opening right on top of it. That's actually a sign of weakness, that there's more to go on the downside. And so the preferred long level was 62.24, and 62.40 is one of the prices I put in. Now take a look at what happened here between 62.40 and 62.24. They got down to 29 ticks. There's the bounce. And notice the price they bounced right back to, 62.70. Okay, and they came right up, back up to test the open. That's what happened here. This, again, is a sign of weakness by that. But a nice bounce occurred here. Then they made, again, a weaker bounce. And here they are still testing the same area. And we can see that these bounces progressively get weaker and weaker and weaker. This is obviously a technical sign that I probably shouldn't be looking to go long anymore at the perfect price of 62.24. That's a perfect price level to go long at. It did provide a lift mark. There's a 25 tick advance in crude off of this perfect price of 62.25, which is the one I typed up in the room this morning, 62.25. It technically bounced, right? It did technically bounce, and crude will likely close above 62.25, but it's showing weakness. Scott took this trade. Again, it wasn't a huge trade, but it was a high probability that they would still bounce off of this level in today's session. So there's a highly successful small 25 tick trade. In front of it, over here, they actually had the better bounce. Okay, this all means weakness. Now, I don't mind telling you, I have a high expectation that overnight or tomorrow morning, crude is going to be coming down to test that. This price action tells me my next critical price level in crude at $61.85, 61.88. That's the neighborhood that's likely to get tested. I don't mind telling you one free trade here for everybody. That should be a trade for a bounce. And their natural price to bounce back to would be 62.25 or more. If this level is good and it's going to hold, they'll bounce back to 62.25 and potentially 62.70. That's what I think crude is going to do. All right. Based on the same premise of what caused it to sell off from 64, when it failed at 62.70, this became all but a guarantee that this was going to happen with the failure of 62.70. And you can see all session long, Mark, from 10 o'clock on, this market stayed below 62.70. And as long as it's below 62.70, it's going to want to touch 62.24. And you can see they didn't give up on it until they literally touched it. And then they still bounced. And this price action relative to 62.20 is anemic. This is, again, going into the pit close. The pit is closed here. This is all electronic. I don't trade electronic in crude. I trade the pit session only. It's the most important time for crude oil, in my opinion. Great action overnight, but that's where I believe crude is going to go. $61.88. I believe it's going to hit that price perhaps tonight, tomorrow in the pit session, and we would normally experience a very nice bounce off of it. I will be going long tomorrow at that price. All right, so hopefully that helps a little bit. And we can take our conversation. I know we've just teaching you what's behind these trades, and this will be part of your ongoing education. This is a great teaching moment for crude today. Why it was textbook. Weakness below 62.70. I'm going to get to 62.25. Some traders here in the room shorted once they saw the failure of 62.70. It's a legitimate trade to be short and target 62.25. And it worked out nicely for those who took that and then went long right there and scalped a quick little 25 ticks off of it. High probability. If I take this type of trade, and this is what I taught you last night, if I take that trade 10 times in a row, I will win 8 to 9 times out of 10. I will have a profitable trade before I stop out. Those are the kinds of trades you want to look for. 80 to 90% probabilities in my favor of a successful trade before I stop out. If I know enough that I can locate those prices and I can read the price action and I can put those odds in my favor, let me ask you a question. How can I lose? How can I lose? Oh, it's easy. Don't have the patience and the discipline to stick to the plan. Have the patience to wait it out. Have the discipline to stick to the plan. Have the discipline to get out of the trade if it's wrong and be willing to take the loss and move on to the next trade. As long as you can do that, you can't lose. Don't follow that and you can't win. All right. So I'm going to leave it at that. Any other questions anybody would like to address, Ryan? It's always nice to have you here. Again, maybe the message isn't new to some. Maybe if many of you have tolerated and listened to me time and time again, and I appreciate that. I just want to spread the message. I truly, truly think that uh, there is a proper path, that this is not a fool's business. A lot of people think trading, just you can't do it. Nobody can do it. Nobody can do it. Yes, you can. But you need to be in the proper place. You need to be in the proper community. You need to take the proper technical knowledge. And God willing, you have to have the patience and the discipline. And I just want people to take the proper approach to trading that reinforces patience and discipline. Modest gains, reasonable trades, proper risk management. Don't blow it up on purpose, okay? For the sole purpose of getting a payout. That just reinforces bad behavior. Okay, that's no different than me lifting with horrible form. I'm going to hurt myself and I'm never going to come back. All right. So there you have it, guys. Mike, appreciate you being here. Joe, of course, appreciate you being here, and Ryan as well.
Of
Um,
course, Gil, man. Gil, thank you so much,
so
man.
it's
I just
great,
love
Ryan.
hearing your
Nice to
voice,
hear your
dude.
voice, and the invitation's always there. If I can help you in any way, don't be a stranger. If the time is right and you can find yourself, come on back. Love to have you. But if I can help anyway in the meantime, hopefully the message might help a little bit today, but with everybody. But I truly like being part of this community. And more importantly, I like knowing that somebody, if I just reach one person and can affect one person's career and one person's future, then then it's a winning trade for me. It really is. And I'll leave it at that. So thanks everybody. Really appreciate it. Cal, appreciate that sentiment. I think it's a great community. We've got great traders in our group. We really do. Good people, I should say. We've got great people in our group who are willing. And I just want to go out and say, if you haven't seen it, Scott and Chase and Sam have gone out on a limb and put their journals in there, and they are journaling their experiences, their trials, their tribulations, their feelings, what was going on with them, win or lose. They're keeping it real. We're going to lose. And I like people that come out and say, hey, I had a losing day, I had a losing trade. This is what I was thinking. This is what going on through my mind. It's supportive. You're, we're not alone. We can feel isolated and alone. You don't need to be isolated and alone. We're all going through this, and we're all here to help each other. And I'm here to help everyone who wants the help. And I'll leave it at that. Love to have Ken, thanks for being here. Hope to see you back in the room soon. And everybody, listen, have a great rest of the evening. Love to see you back here tomorrow. And those of you who, again, might want to ask me some more questions, just send me a DM. Always love to chat, and I'm open to it anytime. Have a great evening, everybody. Until next time, take care.